Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight the Australian dollar found more weakness and therefore it's heading closer to its objective, which is anywhere towards 66.75 or where the base holds around 65.90.95. The dollar index, which measures the greenback strength against a basket of 6 major currencies, edged higher overnight and posted a high around 101.90 before settling around 101.80. In light of the pattern, I feel the dollar index still has further gains and maybe even see a rise up towards the region of 102.90, which is about another 100 points. This would see further weakness for the Australian dollar and also for the euro as the market heads lower and takes out the level of 109.40 area and now confirms the next target to the downside, which is anywhere towards 108.60 or maybe even lower, with the base holding around 107.30.40 area. With the outside range day also confirmed from the break of around that 109.50 area, the bears are likely to weigh on the market. Keep an eye on the MACD because if it marries up with the RSI, then this would support the bearish case even further and maybe, as I mentioned, back towards that bottom side of the range. The dollar increased on Friday after much talk that there's going to be possibly another rate hike in May, but maybe pause in June. Nevertheless, the 25 base point rate hike talk is likely to see further strength for the US dollar and therefore put a little bit of stress on the markets, which has seen the dollar yen now closer to its objective, which I still view may actually clear 134.80.90 and then head on towards the region of 138. I am still relatively bullish due to the fact that the current pattern is relatively firm and the trend is just coming now to support the bullish case, and also with the RSI and the MACD married up does support this view beyond 134.80 and maybe higher. The sterling came under pressure overnight and found further weakness towards the downside to look to 123.10.15 challenge. I feel from the technicals that are weighing quite heavily, keep an eye on this level because 123.10 may not hold and we might actually see a further drop that could see the market fall towards the region of 122.45 and reassess from there. Having taken a bit of a hit on the top side, that is from the bears weighing on the market for gold, the market has plummeted lower and posted an intraday low around 1,981, which is where I view maybe a possible base. But nevertheless, the market is still relatively heavy and therefore could see further weakness if we see a break of 1,980 area and look down towards the region of 1,958 to 64, somewhere around this region where the market found good support in March. With the topside challenge backing away from this resistant area that was seen around 82.90 to 83.25, the bearish divergence that we can see here as the market makes one high and then a new high, while the indicator makes a high and a new low, and broken through the midway point. I feel, as I've recently been calling, that this breakaway gap should be filled, as they tend to be, and therefore could see the market drop anywhere towards, once we see the break of 79.5, down towards the region of 78.70, and with the gap potentially being filled, could see the market fall all the way back down to 75.70. Well, that's a wrap for today. Thank you very much for joining me, and as always, okay, the intro report, and I hope you enjoy the rest of the day.